Hello and good day, doctor. My name is Shamita, Doctor of Balan, and my matrix number is 2730077 from Group 19. Our group will be presenting on the topic Islamic Trade Financing Facilities. Have you ever just come across an advertisement that talks about Islamic trade financing and wonder what does it really mean? Well, the definition of Islamic trade finance is basically trade finance performed according to the laws written from the book Al-Quran. It is more to lending that is based on moral and religious belief. The most recognizable difference between standard trade financing and Islamic trade financing is the implication of Sharia in the latter. Sharia is the set of law mentioned earlier that strictly forbids riba payment. The Islamic term riba defines as the interest applied in loans and payments. It is known that forbidding riba has brought comfort and happiness for those who are already struggling financially. However, it is quite difficult for Islamic banks to make trade transaction between different countries because the other countries expect a good interest gain from any financing deal. Nevertheless, all Islamic financial services completely forbid riba and strictly follow Sharia law. There are various types of facilities and products that are provided in Islamic trading. Naturally, Islamic trade finance can be financed either on credit or on participatory basis. Finance on credit is paying after a certain period of time for the purchased goods, while participatory finance is where the financier resells financed goods to get profit or loss. Sometimes the goods are changed into income-generating production process, so none of the product go to waste. The trading facilities are divided into import and export. Importing is when one country brings in goods and services from abroad for selling. Exporting is when one country sends goods and service to another country for selling. Letter of credit, onshore foreign currency financing, accepted bills and trust receipt goes under importing. Exporting, on the other hand, has inward letter of credit, bills of exchange purchase, export of exchange purchase authorized to purchase.
A very good day. My name is Daniel Josephine, metric number 272593. I will continue the presentation on Trade Working Capital Financing I. So what is Trade Working Capital Financing I? It is known as a financing facility under Mudarabah and buy-in contracts. It is to finance domestic or international trade against letter of credit I or inward bills for collection I or an open account basis. It also enables customer to settle payment in a convenient manner and facilitates convenient cash flow management. It also provides up to 100% financing of the value of the invoice and ensures that selling price will not be affected by fluctuations in the base financing rate. As such, Bank Islam provides both purchases such as financing and sales financing. It consists of three categories, which are TWCFI, letter of credit. In this, a financing facility to finance domestic or international trade against letter of credit I issued by the bank. Secondly is TWCFI, sales, a financing facility to finance sales or export transaction under domestic or international trade against outward bills for collection I or an open account basis. And thirdly is TWCFI, purchase. This is a financing facility to finance domestic or international trade against inward bills for collection I or an open account basis. There are 5 benefits and features of Trade Working Capital Financing I. Firstly, it enables customers to settle payment obligation to the seller or get immediate reimbursement on the advances to the supplier or even get immediate cash for the credit term sales. It also facilitates convenient cash flow management of a business by having a fixed rate financing nature. As a prudent and reliable basis for the preparation of the business projection, since the payment amount will not be affected by the fluctuation in the base financing rate. It also provides up to 100% financing of the invoice value. Last but not least, it is to benefit the unexpected income fund whereby prepayment is allowed. Next is Accepted Bills I. It is also known as ABI. So what is an ABI? ABI is a money market price driven instrument which can be drawn to finance domestic purchases or imports and domestic sales or exports. The ABI may be sold in secondary market, thus enabling the bank to provide attractive financing rate. Consists of 2 types of categories, which are ABI purchase and ABI sales. So ABI purchase, it is a financing facility granted to customer to finance their purchase of tradable goods that include raw materials, semi-finished and finished goods. Payment of suppliers will be made immediately by the bank. It is created for both sides and issuance bill. In the latter of instance, ABI financing enables extension of credit to customer. Okay, next is the ABI sales. This is a financing facility granted to finance sales or export goods on credit terms that include raw materials, semi-finished and finished goods. It is a short-term financing facility whereby the bank purchases the debt which is securitized in the term of accepted bills. There are 4 benefits and features of accepted bills I. Firstly, it is eligible financing provided at attractive financing rate. Secondly, there is no need for rounding down to the nearest thousands as Bank Islam provides up to 100% financing of invoice value. Thirdly, it improves the cash flow. And lastly, there is no acceptance commission while financing profits are paid at the tail end. Example, it is payable upon maturity of the accepted bills I. The following trade financing facility provided by Bank Islam is Trade Tawarruk I, which is also known as TTQI. This is a facility to finance the purchase or importation of goods against domestic or international trade, letter of credit I, or inward bills for collection I or an open account basis. It also enables customer to settle payment in a convenient manner and facilitate convenient cash flow management. It also mitigates the issuance of non-existence of underlying assets and to provide hassle-free to the customer as the underlying asset has been identified upfront. This facility is designed specifically but not limited to cater the following business scenarios. As such, are given 5 scenarios. Firstly is financing for provisions of services, example installation. Secondly, financing with staggered facility disbursement arrangement. As given example, financing of contract at pre-completion stage. Thirdly, financing of asset under construction. Fourthly, financing of intangible items, food and beverage, logistics, software, drawings, deposit payments as well as precious metal including gold or silver. And finally, financing for reimbursement. The benefits and features provided in Trade Tawarruk I are similar to the Trade Working Capital Financing I. As such, is to enable customer to settle payment obligation to the seller or get immediate reimbursement on the advances made to the supplier or even get immediate cash for the credit term sales. It facilitates convenient cash flow management of a business by having a fixed rate financing nature. It is also as a prudent and reliable basis for the preparation of the business projection, since the payment amount will not be affected by fluctuation in the base financing rate. It also provides up to 100% financing of invoice value. Last but not least, it is to benefit the unexpected incoming fund whereby prepayment is allowed.
My name is Gayatri Subramaniam and my matrix number is 272963. Bills of exchange purchased. Bills of exchange purchased is a generic term used to denote bills of exchange purchased or discounted by the bank. Under a domestic collection or a domestic letter of credit negotiation, it is a credit facility made available to an exporter or seller of a local letter of credit as a means to provide the working capital needed for their ongoing business. The benefits are natural hedging of foreign currency exchange as proceeds are received upfront. And then convenient way of collecting sales or export proceeds. Export credit refinancing. The ECRI facility is funded by the Export-Import Bank of Malaysia Berhad at a special rate. The financing only covers Sharia-compliant products and those not listed in the Exim Bank negative list guideline. The financing rate is determined by Exim Bank from time to time. The bank can add on a maximum margin of 1% to the ECRI financing rate for financing you as our customer. The benefits are lower cost of financing as it is funded by EXIM Bank, For post-shipment ECRI, customer can obtain immediate funds upon presenting export documents after shipment. Shipping Guarantee I. Shipping Guarantee I is a facility where a bank indemnifies and guarantees the shipping company for the release of goods to the buyer or importer without the presentation of the original bill of lading issued under the kafala contract. It can be defined as a surety provided by the party to the owner of goods who had placed or deposited his goods with a shipping company, whereby any subsequent claims by the owner for his goods must be met by the guarantor. The benefits are you can take delivery good immediately. You will not have to incur demurrage and warehousing charges. Enables you to sell the goods without delay.
Hi, I'm Shobana Lingamurthy here, and my metric number is 272400. I'm going to talk about letter of credit. In Bank Islam, under trade operation, we can find out this letter of credit. So what is letter of credit? Letter of credit is a written undertaking by the bank at your request as a buyer applicant to pay the seller beneficiary a certain sum of money as stipulated in LC, provided that the seller or beneficiary complies with terms and conditions of the letter of credit. For example, I'll give you a situation. There is a buyer and seller, but the buyer and seller is different geography. For example, the seller is in India and the buyer is in China. So they are going to sell, the seller is going to sell their property in Malaysia. So even though there is a buyer want to buy the property in Malaysia, but they are different geography. So definitely the seller won't trust the new buyer. So the buyer will take letter of credit from the bank. So the bank is guarantee for the money which is buyer should pay to the seller. Definitely the property will sell in creditor. So buy letter of credit. So what is benefit of using letter of credit in Bank Islam? They said there is no transit interest charges as payment to seller or the beneficiary only upon acceptance of documents, and there is no hidden cost. They also provides platform for both parties to agree trade terms and efficient payment and arrangements. So fax application is also accepted in pre-arranged at Bank Islam, and upon issuance they will fax us the copy of letter credit for our reference, and we also can request them to purchase the necessary marine cargo takaful on behalf. Not only letter of credit, Bank Islam also provide inward letter of credit, short form ILCI. So they say when we as an exporter require payment for our export through letter of credit, we will request the buyer or the importer to issue a letter of credit in our favor. This inward letter of credit can be advised through us as an advising bank. So this inward letter of credit advising refers to the service extended by Bank Islam to notify the customer of the arrival and the authenticity of the letter of credit received in by the customer favor. So this service is provided under the concept of ujra, which refer to the fee charged for the service. Bank Islam says there are also a lot of benefits of using inward letter of credit. So let's see what are they. By having a network of correspondence worldwide, it enables us to have more efficient communication with the issuing bank, which is Bank Islam. So, original inward letter of credit may be faxed or emailed to us for our immediate preparation of shipment and document. So, the original letter credit advising may be kept by Bank Islam pending for our presentation of documents, eliminating the transit risk associated with the physical movement of the original letter of credit advising to and from our office. There is not only letter of credit and inward letter of credit. Bank Islam also provides letter of credit transfer. So, should you need someone else to supply the goods required, you may ask for a transferable letter credit for the applicant. So, upon the receiving inward letter of credit, the said can be transferred to another beneficiary either for full or partial amount of the original inward letter of credit value. By doing so, we were still capable to meet the terms and conditions of the inward letter of credit and at the same time maintain the relationship with the importer. So, this service is provided under the concept of Ujrat 2, which refers to the fees charged for the services, said Bank Islam. So, what are the benefits of letter credit of transfer? We don't have to trade facility land with the bank to enjoy the letter credit of transfer service. By establish the letter credit transfer, we don't have to worry about the payment to the second beneficiary as we can pay them upon receiving of payments from the ultimate buyer. Most of the documents required under the inward letter credit will be prepared by the second beneficiary, and you as the first beneficiary will only have to prepare the draft if they required, commission invoice and the shipping document, for example like bill of lading and so on. What I would like to tell is letter of credit and inward letter of credit and transfer letter of credit almost are same. The main issue in this letter of credit is, just I got to give you an example, the same example. Let's see about the same example. For example, a buyer and a seller, they are in different countries and the seller is going to sell a property away from the seller. But definitely the seller won't trust the buyer because they even know who are the buyer. So for the trust issue, the bank will help buyer to give letter of credit to seller. So the seller can trust them by having letter of credit as a proof. So if the buyer didn't pay the money in a credit term or didn't ever pay the money, the seller can ask money to the bank. So the bank is fully responsible for the money because the bank is the guarantee for the money on behalf of the buyer. So the bank will pay first to the seller and then the bank will collect the money from the buyer.
Assalamualaikum, I'm Intan Hasina binti Abdul Rahman, my metric number 272354. I will be presenting Bank Guarantee Islamic. Is an irrecoverable writing obligation issued under contract of kafala by the bank to assure payment in case of demand by the beneficiary. The bank is essential act as a guarantor. Besides that, a guarantee is a legal promise made by the third-party guarantor to cover borrower's debt or other type of liability in case of the borrower default. The time its default happen varies depending on the terms agreed upon by the creditor or the borrower. Benefit and feature of Bank's Guarantee Islamic is widely accepted and can be leveraged to enhance customer reputation and unlock customer capital from required deposit or payment in advance. There are two types of bank guarantee offered in Islamic banking. First one is performance guarantee and financial guarantee. A performance guarantee is an enforced commitment by a corporate entity to supply the necessary sources to a prospective contractor and to assume all contractual obligations of the property contractor. Wherefore, a financial guarantee is a type of promise given by the guarantor to take responsibility for the borrower in case of fault in payment to the lender or investor. Generally, insurance company give guarantee back to the debt of large corporation, which is the borrower, in the payment to the market, which is the lender. Next, I will be explaining the standby letter of credit Islamic. It's often used as a financial guarantee. It ensures payment if and when the applicant fails to repay an advancement made to him or her, or for the beneficiary to demand payment when the application failed on his or her part of the agreement. It also intends to cover any non-performance or failure of the application to fulfill a contract commitment with a third party. In the country where banks are prohibited from issuing guarantee, SBLC in Islamic is the most appropriate method to use. Its guarantee application performance, indebtedness or repayment. SBLC Islamic is active in event of default or non-performance by the application. It's a substitute of a guarantee and governed by the Uniform Custom Practice 600. The process of obtaining an SBLC Islamic is similar to a loan application process. The process starts when the buyer applies for an SBLC Islamic at a Islamic banking. The bank will perform its due and the due is complete before the deal close. There are two benefits and features for SBLC Islamic. It's widely accepted and can be leveraged to enhance customer reputation and unlock capital from required deposit or payment in advance for margin adjustment. Documentary bills for collection Islamic is basically one of the wider accepted method for traded settlement to facilitate seller or exporter in obtaining payment for their things or export. Documentary bill for collection Islamic is normally referred to handling of document by the bank in accordance with instruction received in order to obtain payment or acceptance. There are two, which is deliver document against payment and against accepted, and second, deliver document on the terms and condition. There are two types of documentary bills of collection Islamic, which is inward and outward. The IBC Islamic is based on the contract of wakalah, an agency relationship where appointed to act as an agent on behalf of the exporter bank. Documents are collected by the exporter through his or her bank to perform or present the document to the customer. In exchange for the document, customers are expected to pay at the site or accept to pay on the future date. IBC Islamic are acting as a collection agent of remitting bank, which is exporter of the bank. Now I'll be explaining the outward bills of collection, which is OBC Islamic. The OBC Islamic service is based on the contract of wakalah. It is an agency relationship where act as an agent to send transport document together with the commercial and financial document through established agents bank worldwide for payment for their importer and the buyer. Now I will be explaining the benefit and feature for inward bills of collection Islamic and the outward bills for collection Islamic. IBC Islamic. First, benefit and feature, customer and supplier have comfort of knowing that the documents are handled professionally. Second, customer will find banks are always nearby to the facility to collect the documents. Third, the process of design are to allow customer to obtain their document quickly while making prompt payment to supplier, thus enhancing the business relationship with the supplier. Finally, TWCF Islamic or AB Islamic purchase facility can be arranged to enable them to obtain their good without having worry about the gap in the cash flow. Now I'll be telling the benefit and features of outward bills of collection Islamic, which is OBC Islamic. OBC Islamic is a strategic corresponding banking arrangement between Bank Islam and the lending bank institute enables the transaction to be effectively handled. Second, proper channeling and controlling of legal document to protect customer as an exporter. Finally, sales or exporter financial facility can be arranged to enable customer to obtain the process as and when the needs rise to close the cash flow gap.
As a conclusion, Islamic trade financing is seen as an opportunity for Malaysia for economic growth. It is also considered better than traditional trade financing. Nevertheless, it has its own advantages and disadvantages as there is always two sides to a coin. One of the advantages of Islamic trade financing is that it improves local banking centers through training by setting up programs that are on mutual trading and regional arrangements. It diversifies the supply of exported products with their networking opportunities and develop specific funding instruments with SMEs needs in mind. Furthermore, international trading facilitates trade activities by supporting finance-centered liquidity to the sector and to the real economy within the trade transaction themselves. It can also monitor problems and maintain a closer dialogue with regulators to improve trade finance policies and facilitate socio-economic development. Disadvantages, on the other hand, are mostly based on risk. For example, legal risk, financial risk, political risk, currency and foreign exchange risks, and many more risks relating to Sharia compliance. That's all from us. Thank you.